Silver trades at $88 while COMEX sits near $72. That gap is not normal. That gap is structural stress. 585 million ounces in open interest versus 76.9 million deliverable. Those two numbers do not align. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, the divergence between paper and physical is widening. Let's get straight into it. Gold holds at $5,277 despite a dollar index at 121. That is not typical behavior. Metals usually weaken under dollar strength. This time, they are not. That is the first signal. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Lead story today. COMEX silver market structure. 585 million ounces open interest. 76.9 million ounces registered supply. 13.1% coverage ratio. Effective right now. This follows years of declining registered inventory and rising financial exposure. The unusual detail is the scale of leverage. The leverage. 7.6 times more claims than physical metal. The timing is what deserves scrutiny, not the event itself. The timing. Think about what that sequence actually means. Paper exposure expands while physical availability contracts. That is not random. That is a structural imbalance building over time. If delivery demand increases even slightly, the system must adjust. Where does that adjustment occur? Price or settlement behavior? The ones paying attention already know what to watch next. Before I show you the full data picture, consider this. A 13.1% coverage ratio means nearly 7 claims per ounce. That level historically aligns with stress periods. The data is already telling you something. Let's build it out. Now let's build the full picture because COMEX structure does not exist in a vacuum. COMEX warehouse reports have dropped. 76.9 million ounces registered reported by COMEX warehouses. 248 million ounces eligible reported separately. 585 million ounces open interest from COMEX futures data. That is the full structure. Over 500 million ounces of claims against under 80 million deliverable. Compare that to historical norms near 30% coverage. This is less than half that level. That is not coincidence. That is a pattern. The rate of leverage expansion is not slowing. It is compounding. At the same time, futures pricing sits near $72 while spot trades near $88. That is a $16 divergence. That divergence is not explained by normal basis behavior. It reflects structural tension. The data is doing the talking. The ones who have been called early for pointing out paper leverage are not being dismissed right now. And here is what makes that picture even harder to ignore. 7.6 times leverage across the system. 13.1% coverage ratio. At the same time, futures pricing remains below spot pricing by double digits. That is not a contradiction. That is the setup. And before anyone takes that as a green light, setups can take time. Sometimes a long time. What this tells you is the structural picture. The timing is a completely separate question. Anyone who claims to know the timing is selling something. The ones who verify do not argue about it. They watch positioning. They watch flows. They wait for confirmation. Here is the number most people are not talking about. 100.21 on the dollar index. That number matters. Because this is no longer a backdrop. It is the primary variable. The US dollar index at 100.21 reflects relative strength. Gold at 5,277 holds despite that strength. Silver at $88 holds above futures pricing. That combination is not typical. A strong dollar usually pressures metals. That pressure is not fully transmitting. Think about what that sequence actually means. Markets are still pricing dollar strength as dominant. Look at gold stability and tell me what probability you assign to that continuing unchanged. When markets start pricing the reality of persistent demand alongside dollar stability, Gold reprices higher. Silver reprices faster. That is the historical pattern. Every time metals hold strength against currency pressure, the move extends once pressure fades. It has not been different yet. Now price read. Gold Western Spot at $5,177. Silver Western Spot at $88. COMEX Silver Futures near $72. That is the current structure. Short-term picture remains unclear. The key level is the futures spot divergence. If that gap narrows upward, silver moves sharply higher. If that gap narrows downward, spot corrects lower. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on the lower time frames right now. I cannot tell you what silver does tomorrow. Nobody can. If you think you know, good for you. This is a structurally imbalanced environment with uncertain timing. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one ignored creates the risk. The bear case is real. Dollar index at 100.21 remains firm. Futures pricing at $72 shows weak paper demand. Open interest at 585 million indicates heavy speculative exposure. The bull case is equally real. Spot silver at $88 shows strong physical pricing. Coverage ratio at 13.1% shows limited deliverable supply. Gold holding $5,177 signals institutional demand strength. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. Everything shown today points to one thing. Structural pressure is already built. The only question is when pricing reflects it. Don't take my word for it. Verify every number I gave you today. Check the data yourself. COMEX warehouse reports. CME Group futures data, US dollar index official data, logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0 out.